You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 4/12/21. Well, the lockdowns continue north of the border. They seem to be easing up a little bit south of the border, but the financial manipulations, the financial shenanigans, they continue unabated with no end in sight. Well, you just look at gold and silver. They've been slammed, abused. Now they've been driven under their 50-day moving averages. How will that affect the long-term price? Well, that's a good question. What are your thoughts about the manipulation of the financial system? We'd like to know. Just send an email to my personal email address, kl@kerrylutz.com. Right now, our good friend is on with us, Rob Kirby. You find his work over at kirbyanalytics.com. Rob, welcome back. Great to have you.
Pleasure to be with you again, Kerry.
So what is going on with the financial system here? We see cryptocurrencies. Often I call them kleptocurrencies because there's so many of them that are absolutely pointless and have no purpose for existing, but they've all taken off, and yet gold and silver can't get a bid.
That's pretty much the way it's been. I like to point out to people that as early as last September, which is only 7 months ago, we had gold at 1,900 an ounce. We had Bitcoin at 9,000 an ounce. And today we see gold at 17 and change hundred. Bitcoin at 60,000 this morning. And my view on what's occurred is that China has thrown their weight behind settling crude oil business with Iran and Venezuela. They have, instead of settling their oil accounts with those two countries in dollars, they're now settling those crude oil accounts in cryptocurrency. And that's why the price of oil in dollars has moderated somewhat. But it explains why the cryptocurrencies have taken off like a rocket, while gold has remained moribund. And what that amounts to is de-dollarization on a very, very deep level. And you see, what happened was when America put sanctions on Venezuela and Iran, they disabled those two countries from settling trade in dollars. So the way it really works in reality for Venezuela and Iran, dollars are of no use to them because they've been cut off from the SWIFT payment system. So if you have dollars, if you're a country in the world and you cannot access the SWIFT payment system, the dollars are of no use to you. So recognizing that fact, and I can only believe it was at the behest of the Chinese, because the Chinese need their oil to continue their growth. And so the Chinese found a workaround, excluding the dollar from international trade. But you see, at the margin, that increased transaction demand on cryptos is what lit a fire under the cryptos. And we can see a clear decoupling of crypto from precious metals that occurred, as I mentioned, back last September. And I expect under the current oppressive regime and the bully tactics being employed by America by cutting off their adversaries from dollar settlement, I expect this to heighten, and I expect the cryptos are going an awful lot higher, Kerry. That's the way I see it.
Really? So you think cryptos are a good buy? Bitcoin at 60,000? I mean, do they really have people in an office in Beijing buying Bitcoin and sending it off to Venezuela and Iran? Is that what's really happening?
Well, sure. Well, what happens, Kerry, is you see, China wants the oil and needs the oil, so they pay for it in crypto, and then these countries that have been cut off from doing business in dollars, they take the crypto and they turn around and recycle it back to China again, and to buy the goods and services they need, because they can't do that in dollars. So, there's a saying that necessity is the mother of all invention. And basically, American sanctions have created the necessity of finding a workaround. Now, there are some people who say, well, why wouldn't they just trade in gold? And there's a reason for that, because when China buys gold, they pay for their gold in dollars, because you can't phone up the LBMA or COMEX and say, I'd like to buy a whack of gold with Bitcoin. They don't take Bitcoin at COMEX or LBMA. To do business with them, you have to pay in dollars. So in effect, buying gold from official sources like LBMA and COMEX isn't a viable option for China, even though they love gold. But the gold they buy is all physical metal, and it's predominantly being bought out of Africa. And trying to buy gold in any kind of size on these other exchanges only contributes to enhanced dollar trade. And China figured it out that if they do their trade for their crude oil they need with these two countries in crypto as opposed to dollars, the dollar gets weaker, and it has. Empirically, the dollar has declined. The oil continues to flow. It's just that the dollar's share of global trade has been diminished. The mainstream press doesn't want to talk about this, but that's clearly what's happened. And I mean, and we can see that. We can see that by the activity, the dramatic pickup in nominal pricing of cryptocurrencies, while gold and silver basically remain moribund in nominal terms. Weakness in the dollar and prospects for the dollar as the world's reserve currency are being diminished over time here. And I mean, we can clearly see that occurring. So, it's amazing that the mainstream financial press doesn't want to talk about this and doesn't want to call this what it really is. And, it's going to continue coming. It's a tsunami that's overtaking us. And, pretending it's not occurring isn't going to alleviate the problem for America. The American currency is on its way out in global trade. That's first and foremost, and that's going to continue. And I'm not saying it's going to collapse to nothing tomorrow or next week, but the direction is clear. And I mean, countries that have had it up to the ears with American bullying in capital markets aren't going to put up with us. And they've found workarounds. And this is what's going on.
Interesting. Who would have thunk that cryptocurrencies, whoever created them, actually so effectively Bitcoin's going to be the reserve currency, huh?
Well, I mean, I don't know. I'm not saying that. I'm saying that what I am saying is that it is serving a purpose, or it's serving or fulfilling a function. It's fulfilling a function right now that America has decreed that countries cannot deal in dollars. And, the countries that they've done this to have basically said, okay, fine, we will find an alternative way of, continuing and conducting our commerce. I find it amazing, Kerry, over the years when I've talked about how ultimately the suppression of gold and silver would lead to A, hyperinflation, and would lead to B, an elimination of the American dollar as the world's reserve currency. And over the years, I've had a great many people say to me, so you think commerce is going to stop? I mean, how silly is that people would make the comment that commerce would ever stop? Commerce will never, ever stop. Commerce will morph into different contortions. And, I bring the saying up again, necessity, the mother of all inventions. You disable somebody from conducting business in dollars, they will find a different medium to conduct their trade in. And that is exactly what's occurred. And with America's position on geopolitical matters, I truly anticipate this situation to heighten and to spread, because there are other parties in the world who don't appreciate American bullying in the capital markets. And we're watching it play out in real time in front of our eyes. And to me, the trend is your friend, and I expect more of the same, because I don't see directives coming from the White House or from anybody in America that what is currently being practiced is about to be abandoned anytime soon.
Interesting. So you talk about the law of unintended consequences, huh?
Yeah, well, it's the old saying, things tend to cut both ways. A knife with dual edges cuts both ways. And you don't get it all your way when you're imposing your will on other people. There are consequences for doing so, and this is part of the consequence for basically eliminating or disabling people from settling their trade accounts in dollars.
Yep. Yeah. Amazing. And like you said, it's a trend in motion. So what about, but Bitcoin, is there enough of the stuff out there for the world to be trading on it? Will we be trading 1,000th of a Bitcoin or 1/1,000,000th at some point? How's that going to work?
Don't just survive, thrive. The Financial Survival Network.
Doré Copper Mining is a premier, near-term, high-grade copper and gold redevelopment opportunity with tremendous exploration potential only 14 kilometers from the town of Chibougamau in mine-friendly Quebec. Doré Copper is debt-free and owns a 2,700-ton-per-day mill with an 8 million-ton tailings facility ready to be used. There is already power to site, and it is accessible by paved highway and rail. Doré Copper aims to produce a profitable hub-and-spoke operation of over 100,000 gold equivalent ounces per year, or over 60 million pounds of copper equivalent by 2024. Because of the existing infrastructure and location, a low capex is anticipated to recommence production. Doré Copper trades under DCMC in Toronto and under DRCMF on the OTC. To learn more, go to dorecopper.com. That's dorecopper.com.
This is the Financial Survival Network. The information you need to thrive. Now more than ever.
Well, you see, Kerry, for a great many years, I've had people say to me when I've suggested that the world will return to some kind of a standard, maybe a modified gold standard, maybe a currency that's backed by a basket of tangibles as opposed to a pure, strictly gold standard. I could envision a currency being backed by a basket of things that might include gold, might include silver, might include an agri component, possibly something in base metals, but let's just say a basket
based on something, right? A currency based on
something tangible. And I've had so many naysayers over the years say to me, Kerry, well, if you think we could ever go back to a gold standard, you're just kidding yourself, because there isn't enough gold in the world to return to a gold standard. And to that, I say, I don't buy that for a heartbeat. I mean, see, the problem with gold is not the amount of gold available in the world. The problem is the price of gold in the face of monetary debasement. Gold doesn't work very well as the backer of currency when you fix the price at $35 an ounce and then go on to print trillions of dollars. Doesn't work very well. But if you allow the price of gold to be set in a free market, so instead of gold being, many years ago, instead of trying to hold the price of gold to $35 an ounce, maybe they should have been trying to hold the price of gold to $35 a gram. And maybe the price of gold today, instead of being $1,750 an ounce, maybe it should be $1,750 a gram. And lo and behold, if the price of gold were to be $1,750 a gram, there might be almost enough gold to back the currency. But of course, that would be presumptive, because embedded in that assumption or presumption would be that America actually has gold. And I don't believe America has any gold. So that's my view. And that's why powers that be are so absolutely dismissive of a return to a gold standard, in my view, because America doesn't have any. I certainly know we don't have any here in Canada. We gave ours all away. And that was all part of defeating the big red menace, the Soviet Union, back in the 80s and early 90s. Canada's gold was sacrificed to bash the price of gold down. And my view is the reason Canadian gold was used to accomplish that is because America had already shot their bolt and squandered theirs all away in trying to manage the price through the 70s.
Well, that's a pretty sorry state of affairs, but if you've been smart enough, hopefully, to get gold on your own, the day is going to come where the price controls are going to end, and then we'll find out what it's really worth, won't we?
Yes, holding metals has been one of the most agonizing trades anybody could ever be involved in. Mind you, if people bought gold 15, 16 years ago, when I started pushing it as the go-to asset, you really haven't done bad. Because if you bought it 15 or 16 years ago, you probably got in at $300 to $400 an ounce. And I mean, at $300 to $400 an ounce 15 years ago, gold really hasn't done that bad. I mean, 15 years ago, it's gone up by a factor of, if you take, say, 350 as a number, it's gone up more than 5 times. Well, 15 years ago, I think the Dow Jones might have been 10,000, and the Dow Jones has not gone up 5 times in 15 years. It's gone up maybe 3 times, because I think we're around 3,000. So I mean, if you look at it just from a very high level, gold in the last 15 years has way outperformed the Dow. It's way outperformed the NASDAQ. It's way outperformed many of the more popular and more media-friendly asset classes that they like to ballyhoo how well they've done. They never like to blow the horn for gold and its performance, even when it's done well.
Mm-hmm. Yeah, this is very true. And I've seen it myself. I started buying gold in 1999. And I think I paid $180 an ounce at that point. So it's a nearly tenfold return in the past 21 and a half years. Not bad. But the reality is it should be higher. Just look, if we just take the fact that 1%, we've had erosion of 99% purchasing power in gold, then it being 100 times higher, that would bring it up to what, $3,500, right? Or what was it, $23 in 1916, whenever the Federal Reserve was set up, 1913 rather, right? So it should be 100 times higher. So it should be like slightly over 2,000. But if they're lying to us about the purchasing power and it's really down 99.5%, then it would be 4,000. And if it's a quarter of that, then it would be 8,000. So silver, same thing. It was 60 cents back then, $25 now.
Well, Kerry, the way I like to explain it is to people who, if they don't get it, I like to just say to them, your thoughts on the price of gold or your thoughts on the price of silver. Today, for example, we've seen another savage attack on the price of silver. Mm-hmm. We're down, I think, currently around 40 or 50 cents last time I looked. But the funny thing is, when you go to try and buy some physical silver,
good luck
in this day and age. Look, it's still obtainable, but the way you have to buy it now is you got to pay your money up front, wait 4 to 6 weeks for delivery, if you get it then.
Yeah.
So let's just say the shelves are bare in the coin shops, which is the way most people buy it at retail, is through a coin shop. And let's just say I have a very close friend who is the biggest bullion dealer in Canada. And at different points through the last year, he's been unable to procure 1,000-ounce silver bars.
Yes.
Which he typically buys and recasts into smaller denominations in the name of his own company, so he has product for the shelves in his retail outlets.
Got it.
And let's just say, as he said to me back last summer, first time in over 35 years of him being in this trade that he has not been able to procure 1,000-ounce silver bars on demand immediately.
Yes. Yep. I know. So, I've heard similar tales. So that tells us a lot, doesn't it? It tells us the price is way below what it should be if you can't get the product. Because when you suppress prices, just like rent control in New York City, leads to a shortage of apartments, leads to a shortage of silver. And if you subsidize, you'll get a surplus. Hey, Rob, we really appreciate you coming on, explaining to us this oil trade, what's really happening with cryptos. Your explanation is the best one I've heard so far, which is more reason why you need to go to kirbyanalytics.com and sign up for a subscription, because it'll be well worth your time. And if you got a question for Rob, please send me an email to kl@kerrylutz.com, and make sure you go sign up for your free newsletter on financialsurvivalnetwork.com. Rob, can't thank you enough for coming on. Every time I talk to you, I learn something new, and that is a good thing. We will talk to you again real soon.
Thanks a lot, Kerry, and keep up the good fight.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.